This Solana trading strategy made me $100,000 in 2025. It can be applied to meme coins and even larger cap coins like Solana. I'm going to be really showing you my full strategy in depth. Make sure you stay tuned until the end of the video to see all of my different trading strategies that I apply to different trading time frames. If you do enjoy, smash a like, subscribe, and comment. We're going to first begin here on the 4-hourly time frame, and we're looking at Solana. What we want to do is come over to our indicators section first, type in the EMA, exponential moving average. This strategy is so useful and can be used on multiple different time frames. As I'm going to show you on this video, my trading strategy changes as the market changes and actually differentiates on different time frames. So we can see this orange line on the 4-hourly time frame. When we double click, we want to ensure the length is set to 20. Everything else is default, but you want to ensure it's set to 20 because it will use the last 20 bars to calculate the price for the overall exponential moving average. So these last 20 bars actually create this exponential moving average price. Now, my overall trading strategy begins here in this bull market for Solana. Now, you really have to understand the fundamentals of the EMA. It's actually quite basic, but it's very, very crucial and super profitable in this market. When we have a down and right exponential moving average, if we scroll out, we can see there's some markets where the EMA is down and to the right. That has a negative slope when you do the mathematical calculation, and that negative slope means we can only look for shorts in the market. We can never look for longs because it means we have a higher probability to continue downwards, like we have here in this negative EMA right through here means we have higher probability to continue down. And right through here was the initial EMA showing us some downwards continuation, and we then got that continuation. So it's showing us very, very early that the overall trend change is happening. Now, in comparison, the positive slope in the EMA is when the EMA is moving up and to the right. Positive slope, that means that we can now look for longs in the market. And here, what I want to show you is beginning on the 4-hourly time frame. So this strategy works by trading in the direction of the EMA slope. So if the slope is up and to the right, positive slope, we only look for longs. But where do we actually look for longs in this market? Because you don't want to be buying extremely high, extremely high, extremely high. We'd rather be buying when price comes back to the overall average price, because it happens very, very consistently. Now we'll begin on the 4-hourly time frame like we are here. And what we want to use is a 3% stop level. And now we want to look for trades when price comes back to this exponential moving average, and we want to use a 3% stop. Like you can see here, our 3% stop would be hit right at this level, and we would have had enough price margin on this current trade to allow a 3% stop. And we can continue. We then wait for a massive push above. You can see, look, we had huge pushes above, and every time we came back to the EMA, didn't even have anywhere close. That was a 1% push below the EMA. Here we had a 1.8% push below the EMA. Even here, we had a 1.6% push below the EMA. So you can see how riding the EMA to the upside on the massive uptrend really, really helps. And the only time you get stopped out is you put your stop 3% below this exponential moving average. Now, I believe we could have potentially got stopped out here. Let's calculate this. Grab this measuring tool, go to the EMA and measure down 3%. We can see actually we would have got stopped out just because it hit 3.2% on this current trade, like we can see just here. And overall right here, we would have got stopped out very close to 3%. We can see 2.95, so it would have been perfect to have that 3% stop loss. Now, I'm sure you're asking me, what happens when you get stopped out past 3%? Now, let me explain that to you right now. Inevitably, there will come a time where price pushes beyond 3%. Like here, we were riding this EMA for so very long on this 4-hourly time frame. Here was where I was initially talking, and all through this area until this point here was until we had that 3% push below the EMA. So let's now measure. We can quickly see the price push over double, close to 7% below the EMA. And what this means is here we will get stopped out on our position. We took multiple strong trades. Look, we basically rode this trend from 20, actually would be 25. We rode it all the way to 55. So we made more than 250% on this trade. And we finally got stopped out just once. And what this means is we now need to move to the next higher time frame. I work on the 4-hourly, daily, and then weekly. So let's circle this area to show you around. This was the 14th of November 2023. We'll now move to the daily time frame, and we're going to use this exact same strategy on the daily time frame, but we can see here when we circled, when we got broken below, we now use this daily time frame to buy on the exponential moving average touch. And look at that, we touched the EMA at the price of 50, we then touched the EMA at the price of 54, and look at how we're riding it like a super strong wave to the upside very consistently. We're just making tiny little touches, huge waves, until finally here at this 100 region, we did make a bit of a break below this EMA. So we basically traded Solana from 50 all the way up to 100, and we made a 100% gain. On this particular trade, when we're using the daily, we'd at least want to use a double stop percentage. So we were using a 3% on the 4-hourly. We'd at least want to use 6%. You can see here 6% got broken. We actually hit close to 10% on this trade. And what will happen, so we made over 100% gain on this trade. Once it gets broken on the daily time frame, we then move up to the next section, at least a 5x multiple from the daily, which is actually a weekly. So again, let's circle this area to see this is where the time frame was broken. We'll move to the weekly time frame, reset the chart, and look at this. We can see price nearly perfectly came back to this weekly time frame. Didn't quite touch the EMA. This was around this $80, and then we moved massively higher here to 120, and even here where we broke, looks like we broke the EMA at around this 140, nearly another 100% gain push to the upside. So you can see when you're trading quite a large position size on the 4-hourly time frame, we made multiple trades to the upside, switched to the daily, multiple trades to the upside. Here on the weekly, a really strong trade. And we can also do the exact same thing, because even here, obviously we push quite below this weekly time frame. We double it from 6 to 12, but even here we move 15% and even close to 20% on this push. But we can move up again a 5x multiple. We go from a weekly time frame to a monthly time frame, and watch this. If I was to circle this area, move to the monthly time frame, actually delete that, reset the chart, and now look at this. We nearly perfectly hit this exponential moving average right in here, and even right in the price, and now we're continuing up. So you can see once you get stopped out on a smaller time frame, you can continuously use this trading strategy in higher and higher time frames, you actually made a huge profit, even though we got stopped out on multiple trades. But this is $100,000 trading strategy that you can use and works in nearly every single bull run in every single market. I'm just showing you this one in Solana. If you have enjoyed today's video, smash the like and subscribe. Check out all the links in the video description. I'll see you in the next one.